Welcome to the Morning Download Podcast, your go-to resource for personal finance, economics, and market insights. In just 8 minutes a day, we provide valuable information to help you make better money decisions.
Let's dive right into yesterday's market summary. It was a pretty good day for the market, with the Dow surging over 500 points to kick off the week on a positive note. That's definitely something to be happy about, right? Now let's shift gears and talk about something interesting. Did you know that if Bitcoin were a US-listed stock, it would be the 9th largest in terms of market capitalization? That's right. It's just behind Berkshire Hathaway, which is no small feat. It goes to show the incredible growth and popularity of the cryptocurrency in recent years. For those of you who might not be familiar with market cap, it's a measure of a company's value in the stock market. It's calculated by multiplying the current share price by the total number of shares outstanding. So the fact that Bitcoin is ranking so high in terms of market cap really speaks volumes about its influence and importance in today's financial landscape. So here's the scoop on the economy and news. Brace yourself, because the Treasury is planning to borrow a massive $776 billion in the next quarter. Yep, you heard that right. It's actually going to be the highest amount ever borrowed in the fourth quarter. That being said, it's still a bit lower than the record-breaking $1.01 trillion they borrowed in the previous quarter. The Department of Treasury really knows how to keep things interesting. Surprisingly, this amount is also lower than what the experts had anticipated. Those strategists over at JP Morgan were gearing up for a number around $800 billion. Guess it's always good to be prepared for a little surprise, huh? Now let's switch gears and talk about some global hits. Ever heard of Evergrande? Well, its shares took a nosedive, falling a whopping 20% to an all-time low. That's because a court adjourned the winding up hearing. Yikes! And if that wasn't enough, ON Semiconductor also experienced a tough blow. Their shares also tumbled 20% after their fourth quarter guidance didn't quite meet expectations. Tough break. Last but not least, we can't forget about the escalating conflict between Israel and Hamas. This is causing some concerns about potential market contagion on a global scale. Definitely something to keep an eye on. So let's talk about the latest news in stocks. Specifically, the United Auto Workers Union leaders have given their approval for a tentative agreement with Ford. This agreement comes with some major changes, including $8, $1 billion in new plant investments, $5,000 ratification bonuses, and a 25% compounded wage increase, along with improved profit-sharing payments. Now let's break down those wage increases a bit more. The 25% raise will be implemented in stages. It starts with an 11% increase upon ratification, followed by 3% increases for the next 3 years, and finally a 5% increase in October 2027. And it's not just the wage increase that's noteworthy. The benefits package also includes cost of living adjustments, which are expected to amount to $8,800 cumulatively. All of these changes will raise the top wage to over $40 an hour, with starting wages seeing a significant increase of 68% to over $28 an hour. This tentative agreement, which spans 4.5 years, will now be presented to the 57,000 UAW Ford members for informational meetings and voting. It's worth noting that the negotiations between the union and automakers were not smooth sailing, with targeted strikes taking place after the sides failed to reach agreements before a September 14th deadline. In other news, McDonald's has been doing well lately. We recently recommended it as a buy in our Pro issue, and now the company is hiking prices and seeing positive growth, with a 72% increase in stock value yesterday. If you want more stock picks like this, make sure to join Pro today for free access. Let's dive into the fascinating world of crypto and check out some interesting developments. First up, we have Sam Bankman-Fried, who made waves by labeling some of his customers as dumb. Now that is definitely a bold move. It'll be interesting to see how this plays out in the long run and whether it affects his relationship with those customers. In other news, Celestia's TIA token is trading at an impressive $3.15 on the futures market in anticipation of an upcoming airdrop. That's some serious value right there. Keep an eye on this one, as it could be a potential game changer. Moving on, we have Zodia, a crypto firm that recently launched in Hong Kong. What makes this particularly intriguing is that it's owned by Standard Chartered, a well-known financial institution. It's always fascinating when established players enter the crypto space. So let's see how Zodia performs in the competitive Hong Kong market. Lastly, we can't forget about the unfortunate news of a crypto thief making off with a staggering $4 million in just one day. This incident is another reminder of the risks associated with crypto and the importance of tight security measures. It seems there's never a dull moment in the world of cryptos. That wraps up our quick crypto update for today. Stay tuned for more exciting news and developments in this rapidly evolving space. Americans are known for their spending habits, but with reports of inflation and financial struggles, it may come as a surprise that they are on a spending spree. This excessive spending can be attributed to a few factors. Firstly, Americans are making more money. Salaries are increasing, and unemployment rates are relatively low. This growing income encourages people to spend more. Unfortunately, this also means that savings rates are falling. This can have a significant impact on retirement plans, as many people rely on their savings during their golden years. The pandemic has also played a role in this spending frenzy. During the pandemic, people were unable to go on vacations or buy expensive items. As a result, they saved more money. Now, with restrictions lifting and access to government packages, Americans have accumulated over $2 trillion in savings. This extra money is now being spent, but it's concerning that many are dipping into their savings or going into debt. It's important to save for the rainy days and not solely rely on accumulated funds. There has also been a shift in values when it comes to spending. People are prioritizing experiences over material possessions. This has led to increased spending on entertainment and travel services, benefiting those industries. Investing in well-being and quality of life is seen as more important than acquiring tangible goods. However, experts warn that this spending behavior is not sustainable. Relying on sources that are not reliable or sustainable can lead to financial instability. It is important to rethink spending habits and focus more on saving consistently based on income. So, enjoy those new experiences and treat yourself, but be mindful of not using your savings to support extravagant spending. Balancing spending and saving is crucial for long-term financial well-being. Here's a personal finance quote to kick off your day. Investing should be more like watching paint dry or watching grass grow. If you want excitement, take $800 and go to Las Vegas. That's according to the wise words of Paul Samuelson. Now let's break it down. Investing is often seen as a long-term game, which means it might not give you that instant adrenaline rush like, say, a roller coaster ride in Las Vegas. Samuelson makes a pretty good point here. Instead of chasing after thrills, he suggests approaching investing with a more patient mindset. So why the comparison to watching paint dry or grass grow? Well, these activities are famously known for being slow and steady. Similarly, successful investing often requires patience, discipline, and a focus on the long-term growth potential of your investments. It's not about quick wins or trying to time the market perfectly. Samuelson's witty suggestion of taking $800 and heading to Las Vegas for excitement implies that gambling your money away in the hopes of a big win is not a wise financial decision. In the end, it's about making smart choices with your money and having a clear understanding of the risks and rewards involved. So the next time you find yourself longing for a thrill, maybe take a step back and consider if investing, with all its steady growth potential, might be a better choice in the long run. That's not to say you can't have a little fun in Las Vegas, but remember to gamble responsibly and not make it your main financial strategy. And that wraps up our personal finance quote of the day. Food for thought, right?
In today's episode, we discussed a strong start for investors as the Dow surged and Bitcoin's market cap reached new heights, the Treasury's lower than expected borrowing, Ford and UAW's promising deal, the latest in the world of cryptocurrency, American spending habits, and the importance of focusing on long-term investing rather than short-term excitement. Thanks for tuning into the Morning Download, your go-to podcast for personal finance, economics, and market insights in just 8 minutes a day. Don't forget to subscribe for more helpful content and sign up for our free newsletter at Morning Download. Subscribe.